So good to see all of your names as you're coming in. Welcome, everybody. Thank you for being here. We so appreciate it. So we've got a great panel set up for you today. This is our third live stream webinar in the Connection, Confidence, Commitment series. And as I said, I'm Katie Schatz, the CEO at MAR, and I'm so thrilled to be here with you guys. Just seeing all the faces on the screen and all your names on the side of the screen make me so happy. So be sure to use the chat to say hello and talk with each other during the session. Before I introduce you to the panel, I just want to go over a few little housekeeping things. First, for better streaming, please close any unnecessary browsers and windows on your computer. That'll speed things up and reduce any buffering that might occur. Also, we've muted all of you to avoid any background noise. So if you have a dog barking or a leaf blower going in the background or something, don't worry, we've got you muted. We can't see or hear you. So if you have a question, please use the Q&A function. It's located on the bottom left corner of your screen. If you hover over the bottom of the screen and click on the Q&A little double talk bubble icon, that'll open up the Q&A feature, and we can answer your questions as they come in live during the session. As I said before, you can also access the chat feature, and that's also at the bottom of your screen. If you hover over it, it's the talk bubble, and that allows you to talk with other attendees and the panelists during the session. So I'm going to share my screen for just a second and talk about some upcoming sessions we have. So we're doing these every Thursday at 10 a.m. So like I said, this is the third in our series so far. So next week, we will be talking about branding, new and creative ways to engage clients. So I hope y'all will join us for that. Look for the link to register in the Weekly Realtor and on Facebook and all the social medias. Our awesome panelists for this session. So we've got a great team for you today. Our moderator is going to be Lewis Marshall, and Lewis is one of our directors this year for MAR, and he's a realtor with CryLike. Our panelists include Ryan Guess from Evolve Bank and Trust, Pam Lofton-Wells, Lofton-Wells Insurance, Jeff McEvoy, Home Surety Title and Escrow, and Mark Miesse with Memphis Title Company, Kathy Thurmond-Edwards with State Farm, and Jason Woods with Community Mortgage. And these are all some of our amazing affiliate members who support us and offer a lot of education to you guys and support throughout the year. So we really appreciate them. Also want to give a shout out to some of our MAR annual sponsors, and a couple of them are represented on this panel today. So Home Surety Title, Patriot Bank Mortgage, Memphis Title Company, and Realty Title. So thank you all very much, really appreciate it. And I'm going to go ahead and kick it over to Lewis for him to run the show.
Good morning, everyone. I'd like to take the opportunity to say, hey to everybody. I hope you're staying safe and staying home. Thank you to our panelists for being here today. We appreciate it. We always, as usual, appreciate everything that you as affiliates do for our association. Without you guys, we wouldn't be where we are today. So let's get down to it. We've got some questions here, and if anybody in the audience has questions, you can go to the bottom of your screen where there is a tab for a Q&A. Put that in, and it should pop up and let me know that you have a question that we're not covering something you wanted to know. So let's get started, guys. Okay, so let's start with how has your business changed since the Safe at Home started? Okay, okay, just raise your hand, Katie will unmute you.
Well, most of my team is working from home. Two of us are isolated here in the office, and we have our mask, and I have my thermometer, and we are very careful when we let people come to the door. They knock, they drop their payment through, we email them a receipt. But we are very aware that in our office, we've noticed the real estate market is doing well. We're closing on houses. We're getting people who are buying houses, and we're just amazed, and we're very positive about it. We have Skype meetings every week. We are constantly texting each other, and we are really it's completely different. We're doing more outgoing and outbound calls than we ever have, which is probably something we should be doing even more of anyway. So it's really gotten us to be more aware of our customers. It's, I don't want to say it's been a positive thing, but we're turning things into a positive just to check in on customers, just calling them just to check in. We've taken people, picked up their groceries for them. We've done various things and looking for ways to just save them money, raising deductibles. So it's been completely different, but we're turning it into a positive as best we can.
Thanks, Kathy. Pam, how's it working for you on your end of the insurance?
We have a couple of staff that's in the office, and the majority of us do work from home. We've really utilized Teams on Microsoft. We have a meeting every morning, and everybody has been really positive. Like Kathy, we're making a lot of outbound calls. Actually, the customers have been very appreciative of it, and we're trying to help them find ways to lower their premium during this crisis. So, and it's keeping a happy attitude. That's the biggest thing right there, trying to share a laugh or a smile with our customers.
Thank you. Jason, can you or Ryan address how the business has changed or the way you're doing business in the mortgage industry?
Hey, thanks, Lewis. Yes, we are, like Kathy, most of ours are remote. Majority of us are, but the top essential people in community are still at the office, making sure everything's going. We have a record month this month, but it's pretty crazy how we're still all going together, still staying strong, and still getting all these deals closed on time and not missing a beat from people working at home. Anywhere from our processors to our loan officer assistants, our closers, everybody's at home. The only people at the office really is our owners and underwriters and a few other people that takes the daily run. So we're still hanging in there and going strong.
Ryan?
I'm still going to work. I have to get out of the house. So yeah, I know as far as everything's going, it's still par for the course for myself. But like Jason was saying earlier, a lot of people are working from home, processors and other individuals, but it's still running smoothly. Say the same thing as Jason, that we're all having record months and everybody's trying to pull their weight and work as hard as they can. I'm sure Jason is like me, is getting emails late in the evening with people that are still working late hours. And we're just trying to work together as a team. We know it's difficult. We know everybody's stressed out, but we want to try to stay par for the course for everybody, because I think the more that we can make it seem normal, I think it's a lot easier for people to deal with it mentally. And so that way that everybody's still happy.
Okay, thanks, Ryan. And we have a question for you and Ryan, or you and Jason. These deals that you're closing right now, Jason, I know you mentioned you had a really good, or having a good month. Are these new businesses or new loans that are coming in, or are these ones that you already had existing in your pipelines?
You want me to go first, Ryan, or me?
Yeah, for me, it's a mix. It's a mix of there are still buyers out there and still closing new deals as far as that. But a lot of it is my old pipeline from years of being in the business and refinancing quite a few people and getting in touch with those individuals. And, with me making a changeover in the past 4 months, I had to pick myself back up again and hit the ground running. So a lot of it's just working a lot of stuff and working a lot of the refinance deals. And, as the saying goes, make hay while the sun is shining.
Yeah, mine is about the same. Early March, I started hitting the ground running like Ryan and calling every buyer that I'd closed in the last 10 years, sending out because rates were super low. We gained a lot of headway that way, but still a lot of purchases. Over probably 60% of my pipeline is still purchases, and they're still coming in. So there are agents out there still wanting to see or show houses. Buyers still wanting to see houses. So thank you guys. Thank you guys for sending them and continuing to send them, and we'll keep closing the deals if you guys are willing to get out there and risk, to be out there amongst everybody else. So we appreciate you.
Thank you, Jason. Mark, Jeff, how has this changed your business in the way that we're closing these days?
I'll jump in first. We started out by closing our office publicly and doing closings outside. That worked for a little while. I mean, the weather is kind of dictates whether or not that's comfortable to do. We more recently have opened up 2 conference rooms with pub height tables and no chairs, so people can just walk in, sign the documents with a fresh pen and leave. The other thing about our business is it's not just the people, it's handling the documents afterwards, because the documents can transmit the virus. I've yet to see anything definitively saying how long COVID can live on paper. I saw something at one point that said maybe 72 hours on cardboard. So that's another concern, is trying to figure out, what precautions we need to take with documents themselves. We have a number of our staff that are working remotely, and we've actually separated into 2 distinct teams. One's working at home, one's working in the office, so that if we do have somebody that tests positive in the office, then we can sanitize and reverse the entire team. So that will hopefully not allow for any kind of a hiccup in our business, which all those things is, we're inventing things every day to try to figure out how to do this so that we can do it safely with our employees. We got some employees that are at a higher risk of contracting the virus, so we have to take that into consideration too. And then on top of that, and we've got, of course, remote online notary was already something that we were progressing towards. But that's kind of being thrust at us a lot faster now. And the governor's executive orders in both Tennessee and Mississippi allowing for closings by FaceTime, which sounds great, but there are all kinds of restrictions on how that can be done, whether the title companies will allow us to do that, and whether the lenders will accept that. So there's a lot of things being thrown at us at a fast pace. And thanks to Ryan and Jason, we're getting a lot of refinance business coming in as well. So that makes it even more of a challenge.
Thank you,
What do
Mark.
you got,
Jeff?
Yeah, our business back in the day with the best practices, which I think everyone remembers back in 2015, we pretty much were set up for this type of, not necessarily this one, but calamities of whether there was going to be fire, earthquake, anything like that type of situation. So we've been set up for remote close, or to have people working from home for quite some time now. And we've got, so everyone is capable. It's still a pain, no doubt about it, because it's just a learning curve, but it just takes a little bit more time and a little bit more patience. And I think I put it very nicely, having a little bit more grace with each other and for each other. That being, whether it be the clients, the agents, everyone just trying to have a little bit more grace and patience with each other, and realizing that it takes a little bit more time to necessarily do things. And then with regards to the outside closings, we've been doing those since day one. That was our mode, was to get, but we had people coming in at one point in time, and then it's like you get the scare, and it's like, nope, it's not worth the risk to the agents, the clients, the employees. And so we did everything outside. We've been doing seller sides and investor sides closings remotely online since August. So we're quite capable and know that backwards and forwards pretty well, and I've been working on that since forever with regards to remote closing since year 2000. I mean, it's been my baby of what I really love to do and want to do. So it's been, and I've been talking a lot, with a lot of folks trying to figure it out. So yes, there's a lot of different things. The staff has been really working very nicely, and They come in as to, just a small group being here to make sure that they're kind of moving the documents out to the attorneys to do the closing, so they're not having a lot of contact. So that's the number one thing, is just trying to keep everyone safe and trying to promote the social distancing as much as possible. We've made it where the monies are also being able to move, whereas the agent's able to get the earnest money into us remotely. Their clients are able to get their earnest money in, and we're able to get their commission to them, also delivering it directly into their operating account. That's been something we've been working on for a long time with our bank, to make sure that we're able to get that popped in, so that less contact. Everything's about trying to be efficient, less contact, and it gets the money moving smoothly, and trying to avoid, although we love seeing people, and wanting to be with people, but it's just trying to keep everyone safe.
Safe. All right, thank you, Jeff. I know, Pam, yesterday you talked about, as we're going through this pandemic, that people are having to make decisions on what they can pay or what they feel like they need to get paid as far as their bills, and how important it is to work with their insurance agents to try to make sure that they don't let their insurance lapse, because it can cause a problem in the road. Can you explain that a little bit, so that we can talk to our, as realtors, we can talk to our clients about how important it is to keep their insurance?
Oh, sure. So if they allow their homeowner's insurance to cancel, and that, that would probably be if they don't have an escrow, it could have an impact on them negatively, because insurance is based on credit. And then also it goes under new underwriting guidelines. So it could cause their rate to go up. And then two, they could go in and have to have forced placed insurance. So it does cause a huge financial bind on them if they do that. Because, everybody, it was funny, somebody asked me, they said they were buying a car and they were going to have the deferment of payments. And I'm like, you're still going to have to owe those payments in 3 months. And so the customers are really not understanding the true impact of these payments that the companies are doing. So they need to really check with them. Even with the auto insurance, if they allow it to cancel and there's a lapse in coverage, they're going to pay a lot more for insurance. So that's going to, again, put them in a financial bind. So it's best for them to contact their agent and go over their policy to see ways to save money, even if it's minimizing coverage, which we don't suggest, but it will help them keep that coverage going and not have a financial impact on them.
Thank you, Pam. And Kathy, is one of the options to possibly increase your deductible to bring your insurance premium down?
Yes, and just like Pam said, if we say, okay, we're going to delay your renewal date for 2 months, you're still going to owe that. So we, like Pam, have been working with them to, okay, now you're not driving your car, you're working from home. So we could work on low mileage. We can do what we have at our company, which is Drive Safe and Save. Other companies have similar things. A device that I know you love, Lewis, that you put in your car and tells me that I'm a terrible driver, but it also, I have low mileage, so it saves me a lot of money. And so you do that, low mileage. We're also, since we're extending the renewal date, we're asking people to pay as much as you can, because we don't want them to, if you owe $100 and then in 3 months they're going to owe $300. If they don't have the 100 now, they're not going to have the 300 then. To kind of chip away at it, we are sending out some rebills because we've lowered the raised the deductibles. And remember, if you don't have a lien on your car, I mean, you could drop some of the collision, comprehensive, things like that. We just got to make sure that a year from now, when they put in their odometer reading, you may go back because now you're driving, in which we'd all love to still be driving again. One other thing, the different companies are doing different things. We're doing a dividend, which is a return of premium, and it's going to be applied to their policies, their auto policies coming up. But you guys are more interested in the homeowners. So in the homeowners arena, we are encouraging the high deductibles, which we always have, because it's just much more cost effective, and it will help them at closing time too. So I know. Well, another thing is you guys are doing so many things remotely. I've had crazy questions that I have life insurance and will it pay if I die of COVID-19? I went, yes. And so I get crazy questions. And the other thing is so many things we can do remotely, like Pam and I can do autos over the phone, homeowners over the phone. Probably the only thing, life insurance over the phone, probably the only thing you can't do over the phone would be something in the health arena and need a wet signature because of HIPAA.
Thank you, Kathy. And Jason, Ryan, we've heard a lot about these words forgiveness and forbearance. And I think a lot of people are confused or don't quite understand when they're told that their lender's going to let them skip 3 months of payments, and then the difference between forgiving those payments and forbearance. Could y'all address that for us, please?
I'll let you go first.
All right. The word forgive in our industry, I don't believe it actually exists. Let's just be honest. No, they're not going to forgive payments. They're not just saying, "Oh, okay, don't worry about that. We're gonna let you go on that." That's not going to occur. You can put it in forbearance, but what I really recommend people to do before they actually try to move forward with that is actually call their service provider, who they're making that monthly payment to, because what they'll find out is not possibly cracked up to what it's supposed to be. Talked to a client yesterday. They had a mortgage with Bank of America, and Bank of America sent them something with regards to skipping 3 months. But his payment's $2,500 a month. They said, but on month 4, that you'd had to catch all the way back up. So you'd had to bring basically $10,000. So I don't understand where they think I'm going to stop pay, not pay, not pay. And then all of a sudden I'm going to come to the table with $10,000. So it's one thing if the forbearance is tacked on to the end of the mortgage and it's just left sitting out there. But a lot of these forbearances are expected to be paid back in a timely fashion. And for a lot of people, that's just not feasible. So I'd really do your homework on that before you move forward with anything, and to make sure that you know what you're getting yourself into, because the last thing you want to do once this stuff starts passing is put yourself in that predicament, and then all of a sudden you're not able to pay it back, and then possibly lead yourself down a pathway of either foreclosure or multiple mortgage late, which would, of course, destroy your credit score. So that's my 2 cents worth.
Thank you, Ryan.
Right.
Jason?
Yeah, Regina Hubbard sent out something on Facebook a few days ago, like 5 to 7 points from Dave Ramsey, which was fantastic. So I think I saw Regina on here earlier on the attendee list. So thank you for doing that. There's a lot of people out there, like Ryan said, they have absolutely no clue. They're just hearing what the media says, what the government says, of saying, hey, don't pay your mortgage, don't pay your mortgage. But really what happens is it hurts the servicing side. So, and COVID-19 has made many economic firsts, but most of them has been unpleasant. Nothing could have prepared the mortgage industry for the amount of forbearances created by that, this unprecedented level of unemployment in the CARES Act. But, the CARES Act makes the forbearance a legal requirement for mortgage servicers. But the CARES Act doesn't include any protection for the servicers. And that's the problem, because servicers are they're liable to the mortgage investors for timely payments, even if those homeowners aren't paying their mortgages, or renters who pay the landlords who have to pay the mortgages. So, investors grew extremely conservative, and that's why they start talking about rates. That's why they started offering where the rights to serve mortgages and where the rates started moving higher, even though those bond rates were lower. So that's why if everybody was asking, why are the rates so high right now on government loans, and it's because of that. They're so scared to start offering mortgages out there when they're not getting their money on the return. So,
well, I have a friend of mine that experienced something where she had contacted her servicer or lender about the forbearance, and then I decided that it would be better to go the refinancing route, and ran into trouble there because she was told that she was in forbearance. So I guess we need to make sure that everybody understands that talking to your lender or attempting to do the forbearance can affect, or does it affect your ability to refinance? Ryan, Jason?
I would think if they had skipped a payment, if they were like 30 days past due or 60 days past due, then yes, it's going to, because when we refinance, we have to make sure that they have paid that month's payment. And if they haven't, then they're going to have to make that month's payment. But if they'd already went 30 days past due on a forbearance or not, yeah, I believe it's going to cause an issue. So the best thing is call the servicer, figure out exactly what your options are, because Ryan is right. If you do go into a forbearance, then those payments are due within 4 months, all of them. I have heard, like Ryan, another person called me and said, hey, they gave us both options. We could either do the forbearance or they could tack it on the end. But when you tack it on the end, I mean, you're still missing payments, and who knows? These servicers have every right to put a 30-day past due on your credit, and it's going to take an act of Congress to get it off. So just be wary, please. Don't just because the media says something, don't believe it.
Yeah, just because the media says you don't have to pay, you have to pay.
That's
Right.
right. Thank you, Louis.
Do your own investigation work. Never leave it up to somebody else to give you the answers, especially when it comes with your money. Because like Jason said, these service providers, what you could run into is that even though they said they're not going to mark you late, well, they make mistakes. And then once that late's on there, you're going to have a monumental time trying to get those lates off your credit report. If you have if you have a 30-day and then a 60-day late, you can't even refinance at that point in time. And then going back to the whole forbearance aspect, if you're forbearing the loan, I know for a fact that we can't refinance it. We can't touch it. And this is one of the things that we talked about before, is that the reason why the interest rates aren't as low based on where mortgage-backed securities are is because these service providers that are holding this paper, they're scared to death, especially on the government loan in dealing with Ginnie Mae. Like Jason said, they still have to pay this money out to these people, whether or not individuals want to pay. So it puts them in a huge predicament as us as a lender. Let's say hypothetically, we did a FHA mortgage for somebody, and then within a month, that person puts their mortgage in forbearance. We have to take that loan back. It's almost like a first payment default in the sense that it puts us at a huge risk point, because, you know, here it is, you're trying to, everybody's trying to make money. And that's why, I mean, I know we want to help out people and everything, but this is our job, this is our careers, and they still have to make money on the back end. And that's what it's going to come down to. But I don't know if Jason would agree with me on this or not, but I feel that though, as time goes by, things start improving, you're actually going to see interest rates possibly drop quite a bit.
Okay.
Once people start getting back in the workforce, because where the mortgage-backed security coupons are, especially the 2.5 and the 3 coupon, should suggest that interest rates almost be a half a point lower.
All right.
So
Yeah.
Thank you, Ryan. Thank you. Mark, Jeff, would it be to our advantage as realtors, should we refer our borrowers and mortgagors to you as attorneys for a better understanding of the written agreement from the servicer? Is that something that you would be able to help a client with?
You know, I think that in most cases, this is going to be based on a special circumstance that the lender is going to be working with you on, because the actual terms of the agreement are you have to pay it. And again, looking at the agreement's probably not going to help. You know,
No, it's,
Yeah.
I mean, that's the note. The note is the promise to pay. It says, and the deed of trust says, you don't pay, you don't stay.
Right.
Bottom line, that's the way it is. They put the moratorium on, and they're letting it go by for a little bit of giving them some grace, but you're still going to have to come up and pay what needs to be paid. The servicing is between really the lender and the secondary market, and who's going to be the servicer. And the servicers right now are getting hammered. They don't have if they've got 20% of that capital that's not coming in right now, it's getting tight, especially for the guys that are non-banks, the servicers that are non-banking. So they've got some really really tough ways to go as to the money that's available to them. So it can be spooky for them.
Okay, Mark, Jeff, you both talked about different ways you're handling closings. Can you explain a little bit about what the difference is if you're going to do a remote closing and if you're offering online closing and how that would work?
The remote online closing by law was passed last year, and it came into effect in July. And that allows, with certain software and certain for safety and precaution, to be able to identify the consumer, borrower, seller, client by their ID, and they have a credential analysis that's done of them. And so the notary is able to go online and notarize the documents online. It's a very cool process as to, they pull up your credit, and they have certain questions that you're asked at some point in time, and they go through this process. So that would be the remote online, and there are certain lenders, especially Fannie Mae. Fannie Mae has been really hard pushing this for quite some time. They would love to have all remote online RON closings is what it's called. The IPEN would be a digital type closing. It mean if we were sitting together, we would just basically sign documents at the table, and everyone would just basically push a button that would affix your digital signature, which is it's a nice deal too, because all the lenders, it would be nice to get to that point. A lot of the secondary market is very concerned about these type of situations because they got 50 different jurisdictions. It means they got 50 different rules. It also means that they also don't want to be the path setters. So the GSEs, that being the Fannie and the Freddies, are the ones that have been the ones that have been pursuing this and have been trying to set out the pilots. We've been working on pilots with them for some time. Now, there's another thing that came out that a lot of folks thought about were doing some limited power of attorneys. So was one out to basically happen here, so that if a consumer borrower wanted to do a deal, they would give the power of attorney to our offices. And we would go through the process. What the suggestion would be, we would do a closing online with them, have them sign the limited power of attorney, and then we would in turn turn around and sign all of the physical documents for the consumer after we have gone through telling them everything that they just signed, and getting that online and recording it, because there are certain requirements again for recording those things. Now, you keeping in mind those recordings that I was just talking about, in the safety and precautions that was placed in statutes. That comes to our next point for the governor. The governors, because there's been a really tough. There haven't been a lot of folks that have been able to jump onto RON closings yet, because it was just, there weren't a lot of folks that were able to handle it yet. A lot of the governors all throughout the states have come up with this idea of basically, well, let's go ahead and let's do a remote signing, a digital, or do a video conference. Well, our underwriters are not accepting just any video conference, such as a Zoom like we're doing right now, may not be accepted. In fact, probably unlikely that it would be accepted. Same thing with a FaceTime, definitely not accepted. But it's not only them. We've got to be concerned with the fact of what lenders are going to be accepting those too. So what this allows us to do is, the consumer will be in front of us. They will sign the documents online, and then they will get the documents to us, and we will physically notarize those documents that they have already signed and affix the notary. So therefore, what we're needing to really do is to make sure that that you have all the parties, the lenders, because the lender that is not communicating with their secondary market may end up having to buy this back if they don't properly disclose it. If it's not properly underwritten, through the underwriter also, it could be having issues of us having to buy it back. Question also is we've got to be worried about our E&O carriers. So there's endless amount of parties that are going to be involved with this moving parties. And now a lot of the secondary market folks that I've been talking to are basically scrambling, trying to figure out whether, and lenders, whether they can get this purchased and whether they can do it. Fannie Mae has said that they will accept it. And I haven't yet heard as to what Wells Fargo is ready to do.
So it looks like we've got a lot of changes that are happening in our closing processes during the COVID-19, and it looks like there's more changes coming. Mark, was there anything you wanted to add to that?
Well, just to really simplify, the remote online notary is going to be an electronic document. It's not going to be a paper document. So again, will a lender accept an electronic document, an electronic note? There are all kinds of issues associated with that, such as who's got the original? What is the original? And so for that reason, that's not going to be universally accepted, at least instantaneously. I mean, this has been around for a couple, 3 years now, and there's still very few lenders that are accepting electronic notes. What the governor allowed for creates a physical paper document. But again, there's still the issues of fraud with any kind of remote closing that you don't have with an in-person closing. There are also requirements, for example, that all parties have to be in the state of Tennessee. And honestly, I don't know how I, sitting at a remote desktop, am going to be able to prove that whoever is signing the document is located in Tennessee, unless they take their phone and walk out to the street and show me where they are. And there's all kinds of problems and issues and things that are going to be dealt with. And again, the biggest problem with the governor's order is it expires within a few weeks, and whatever protocols we set up may be for the limited purpose of doing very few closings.
Right. Okay. Thank you, guys. To our lenders, with the COVID-19 in effect, what specific lending underwriter guidelines have you changed in the past 2 weeks, especially when it comes to the verification of employment?
Jason, go ahead, bud.
All right, so it's very important, guys. Hold on, I'm trying to do something on my screen here. When you talk to your buyers, tell them to figure out, because so many people are working remotely in HR or whoever does their verification of employments. So tell them up front to figure out who that is, if it's a work number, or if it's an online verification, or if it's somebody that they can physically talk to. Because as normal, we do a verification of employment up front. It's probably within 3 to 5 days after we get a contract, once it goes through setup. But what they're making us do now is day of verification of employments, which means is if I have a closing today, our processors are having to recall those employers and get verification that that borrower has not been furloughed, laid off, cut hours, cut pay. And if it has, it can throw the whole deal. We've had several that have fallen out the day of closing because the person got furloughed. And if they are not physically working during or at the time of closing, then we cannot close a loan. I'm sure Ryan and them and all the other lenders are in the same boat. It's not just one lender, it's across the board. I mean, that is a huge issue. It's like trying to do a loan with a person with no income. It just doesn't happen, unfortunately. And what they're doing now is, if they have a job the day that we close, and let's say the state puts us on another 30-day shelter in place, well, if these small businesses can't sustain and they cannot continue to pay their people and they furlough them, if they get furloughed 5 to 7 days or even 10 days after this thing closes, the investors who we're trying to sell these loans to are doing their own verification of employment. If they call and they have been furloughed after we have already verified the day we close and they had a job and they get furloughed 10 days later, on that 10th day they call and they furlough, guess what? We're buying a loan back. That means that we have to hold it. And that can put us and any lender out there in serious harm. I mean, that happened on 15 to 30, 45 deals. I mean, the average lender in town closes probably over 100 deals a month or more, sometimes 300 a month. So think about how many people are being laid off, and that could put somebody out of business really quick. That's why us as lenders are being extremely cautious, and underwriting guidelines are changing. And then it's not, Evolve or Community or whoever else is out there. It's Fannie Mae and FHA changing these guidelines. They are protecting everyone. So just remember that it's not your lender who is changing the guidelines just to be jackhats and don't want to lend. We're getting this from the top level of Fannie Mae and FHA. So please be patient with your lender. We would appreciate it.
I couldn't have said it better than what Jason just said. I mean, he pretty much nailed every point on what's occurring right now. Just have that honest discussion. If you're, as a realtor, I would ask you to do your due diligence when you're talking to your client. I don't know what you guys can ask and can't ask but if they mention something about possibly being furloughed or, something's going on with their job, let your lender know. Keep us in the know, because you know what? Sometimes buyers just don't let us know everything. And sometimes we find it out at the last minute, and nobody likes surprises. So as a realtor, if you hear anything from the buyer that may be of interest to us and what we're trying to achieve as a team, because that's what we are, we're working towards the final goal of getting everybody to the closing table. Let us know. Keep us in the loop with what you know, because it'll make the whole process a lot easier for everyone.
All right, thank you guys. Kathy, Pam, I know when we talked earlier, you both talked about that you were doing some things in your business now that you haven't done in the past. If you could possibly touch base on that a little bit.
Thanks, Kathy. I have my staff calling all of our customers, trying to share a joke with them and seeing if there's anything that we can do for them. And then too, a lot of things we're doing, we're trying to, on our social media, try to make things fun and not so serious, because they're overwhelmed with COVID. Everything seems to have COVID. So we even try to deter the conversation from that. So, and then trying to keep our staff, that's been the hardest thing, is keeping them upbeat, because they are getting the calls up front, and you got a lot of people that are stressed out and worried about income. So we start our morning off every morning with Zoom, and it's a fun process, and they seem to really enjoy it. The funny thing is, I thought everybody would want to work from home. They are so ready to get back to work. It's not all what it's meant out to be. Kathy?
Well, that's true in our place, because they are so bored and getting fat and lazy. No, I'm just kidding. Seriously, from day one, when all this started, one of the ladies in my office, Teresa, who's really kind of like the angel of the office, she started, got a list of everybody 70 and older, and she started calling them. They were so appreciative of that and just checking in. Some of them wanted to go ahead and talk to me, and we, some of these people, I've been an agent 30 years, so I've grown up with them, grown old with them, and so that was kind of a good. Well, when we started calling the people between 60 and 69, which is my age group, not all of us are nice and retired. So that was a little bit more of, okay, Kathy, let's see what we can do with this premium. When are we gonna get our check and things like that. So it's just the fact that, like Pam said, reaching out has been so important, because there are companies who don't have agents, and I think we need to show them why they have an agent, why they have people they can call and not punch in a bunch of numbers and we can just listen. So oftentimes people just need someone to talk to. And she's right, Pam's right, people working from home is not always cracked up to be, which is why I come into the office at least 3 to 4 days out of the 5. A, I don't want to kill my husband, but B, I just want to eat. So I came here. Seriously, it's been really, and not everybody is great and happy to hear from us, but it's like Pam said, once you start talking and you listen to them, and it's all about them, it's not about us, and everything should be about the customer as all of us do in this business, to really focus on the customer and not on ourselves. And it's kind of like it's more blessed to give than to receive. And that's really what we're trying to do, is give of ourselves to our customers.
Thank you, ladies. Jason, Ryan, can you please speak to the what your lender qualifications, and are you seeing an increase in the minimum credit score, tougher restrictions to get the loan to qualify? What are you experiencing there?
Go ahead, Ryan.
As far as, not as much with conventional loans, I haven't seen anything. Have you seen anything with Fannie or Freddie? I haven't seen anything with debt to income issues there. What we've seen, pretty much everything come about is on any governmental loans. Basically anything that's backed by Ginnie Mae, which would be USDA, VA, and FHA. What we're finding is illiquidity in the market to sell those loans off if below a 680 credit score. We're finding that nobody's really wanting to take that paper. There may be a few broker shops out there that are doing less than that, but you're going to pay pretty heavily for that. So as far as like the actual debt to income, nothing has been updated on any of the underwriting engines as far as debt to income. Credit score, yes, with all governmental loans right now, and the ability to sell those off has become very difficult for us, and I'm pretty sure for the rest, if Jason can attest to that.
Yeah, credit scores have definitely risen. You know, most lenders across town have went to at least a 680, and the ones under that, like Ryan said, it's going to be tough. So there are still a few banks in town that are still doing those. So if you know some folks, go get the loans. I mean, I've actually sent several loans out that agents have sent me that I can't do. I'm not going to just say I can't do it and push them on. I've sent them on to some friends in the business that can still do them. So if you guys have anybody out there, they're out there. So keep looking. We've had some things like, you know, investor cash outs. We can't do those right now. Second home investment properties, you know, cash out deals, things like that. So there are some restrictions coming on. Anything that has to do with investment loans, they're getting tough because, again, it goes back to that whole thing we were talking about earlier, is where the renters are not paying their mortgage payments or their rent for the month. So that puts the investors in line of not having possibly the money or having any reserve to pay that money. So that's why they're putting the restrictions on those. So I don't know about you guys, Ryan, but all manual FHA, VA loans, we can't do them right now.
No.
Regardless, if we get a refer eligible, we can't do it. And I think it will, as Ryan said earlier, once all this stuff blows over, pray it does soon, I think things will go back to normal. Credit scores will drop again, go back to normal, hopefully within 60 to 90 days. I mean, it could be longer, but that's what we're hoping.
Well, I know everybody on this panel, like myself, was in the business in 2008 when everything fell apart. Do you think we're going to see a major increase in defaults on loans?
I'm praying that we don't see 08 again. And I know everybody on this panel is in the same boat. I mean, when I'm saying my prayers at night, I'm praying that we get back on track, and we get back on track fast. I don't think that we can go through another 08 and come out like we did afterwards. But you know, I think we will see a lot of defaults, but it all depends on when we go back to normalcy. You know, the quicker we can get back to normalcy, the less amount of that we'll probably see.
Okay,
Yeah.
and then do you think, or what about the appraisals? I know seems like appraisals are taking longer now to get there, and are you making changes on time limits for appraisals and to go back for final appraisals?
Yeah, Fannie Mae's pushed out some stuff, and this only, goes to Fannie Mae and Freddie loans, that they're doing desktops, exterior only, or a full appraisal. And that's just the fact of, because a lot of people are not wanting to go in the houses. You know, they're afraid they're going to catch COVID, or, they're going to put themselves at risk. So, normally our turn time is 7 days. I mean, it's taken sometimes 13 days, but it took 15 days before all this stuff started, before on some appraisers. So is it creating a delay? Yeah, it is, for sure. We've had some, you know, that we've had to call 5 or 6 people just because they didn't want to go into a certain house or a certain neighborhood for some reason. And so it's kind of crazy why they're picking and choosing, but that's what we've seen.
As we're winding down here for the last couple of minutes, if everybody would take a minute here and try to share something with everybody that you're doing to help keep yourself positive and motivated during this process.
There you go, Pam.
There you go, Pam.
Great. Bring it up.
My husband bought me 2 cases of wine. He keeps replacing it every morning.
Yeah.
Well, my specialty is my homemade, or is my chocolate martini. So
That sounds
I will
amazing.
probably, I told somebody I'll have zits and wobble at the end of this thing, because I'll put on all this weight and all these zits, and I'll have my chocolate martini.
You know, on the flip side of that, Abby's got me on a diet that's no alcohol for 12 weeks.
Oh no, that's bad. What have you
Wow,
replaced it
thank
with? Chocolate?
No, that's not on the diet either.
For me, it's just, it's just,
do what, Ryan?
no, for me, it's just remembering that there's someone much bigger and larger in control of everything going on. And I truly feel that God will see us through this. I think that trying to do our best part in being positive and leaving the politicalness out of everything on the he said, she said thing, it will do us a lot better. You know, just continue to uplift your neighbor and see the best in everybody, and offer somebody a smile and a wave instead of a handshake, you know, goes a long way. You know, asking people, is there anything that you can do for them? When you do that, when you naturally just come out of it in your mouth and allow yourself to do that, you're going to feel better about yourself and the fact that that person on the other side is going to reciprocate that. So just stay positive. We're gonna make it through this, and we're going to be a lot better off in the end.
Yeah.
Amen. Amen to Ryan.
Yep. What I've been doing, guys, is sending quick videos to people. It's just a 20 or 30-second shout out to them. You know, we always take it for granted that we see so many people during the day, especially in our business, that we come and go in people's out of people's offices and go into closing attorneys' offices, and we run into people. But a lot of people have been stuck at the house for over 30 days, and they don't see anybody except this, you know, Zoom. But for the attendees, all they're doing is watching. They're not necessarily talking to somebody. So if you know anybody out there, just agent friends or your past clients or whoever, send them a quick hello. It's so easy. Go to your text, record yourself inside that text and say, hi, how you doing? Checking in on you, making sure you love you, whatever you want to say. It's so good. I've had so many good responses from that. So it's a good thing. So stay in touch with other people.
For us, we've been my staff's been great. I mean, they've just been outstanding. We've just gotten better at what we're doing, and we're really taking, you know, it's been a lot of work and a lot more hours, but we're also getting better at things that we do. We're learning things to do better and to do a better job, and to figure out how to communicate better with each other also. So we're making all these negatives out of the positive. You know, I think that Memphis, we're in a good place. I think that you know, we've got transportation, we've got FedEx, we've got the hospitals. You know, we're always kind of some of the last ones to look at. We're not going to be like Florida, who's got you know, all of the tourism and such that's coming in at hardcore to them. So I think that we're going to be hopefully, if we could just make sure that the agents get the sellers not to be fearful of selling their home, and to get that going. I think that I agree with what everyone has stated, that it looks like we've got got some good things on the horizon. I think that we'll be able to rebound very nicely. We were already rocking and rolling in Memphis. We've got still a lot of good things coming on here. And we're blessed in Memphis, continue to be.
Katie and I had the privilege yesterday of seeing the Paula Monafor webinar yesterday. And the three things that she talked about, which stuck with me, was during this time, especially, was to show grace to the people around you, to show gratitude for the things that you have in your life, and to show growth by continuing to make yourself a better agent, a better lender, attorney, whatever it is, whether it's professionally or personally. And that really struck home with me. And I think that's the best way to try to get through something like this. So I guess at this point, I'd like to turn it back over to Katie. And thank you guys. It's been a pleasure working with you guys today, or being on here with you guys.
Thank you. It's been a pleasure.
Yeah, thank you guys all so much. Our panelists were amazing. This was really great information, really good questions from the crowd. So thank you guys for that. And just a great conversation. So I really appreciate all of you guys being willing to do this for us. We had a little practice run yesterday and we're able to talk, and that helped us, I think, make this really meaty and good for you guys today. So thank you guys. And for all of you who attended, I really appreciate it. Thanks for being here. Just knowing that y'all are out there makes me feel happy. And that's kind of part of what Jason and the other people were saying about staying connected. So thank you for that. So our next webinar is, again, next Thursday morning at 10 a.m. So you'll find registration information on the Weekly Realtor, MAR.org, and social media. So thanks again for being here. Thank you again to our awesome panelists. We really, really appreciate it. And just know that the MAR staff is definitely still here for you. We're all working full time, and we've totally got this working remotely thing figured out. And we do Zooms all the time as well, trying to do some videos for you so that you can still see our faces. But please, please reach out to us if you need anything. We are absolutely here for you, and we miss you. So please talk to us. But it's great to see y'all today. I hope you make it a great day and go out there and serve your clients.
Thanks, guys. Bye.